In today's video, I'm going to be going over 7 common day trading questions. Now these questions are actually pulled from members in my Discord server, and if you want to join the Discord server and get your questions into one of the next videos like this, I'll have a link in the description below. Oftentimes, people have the same questions as each other, especially when you're new to day trading and there's so much information that's unknown. So hopefully some of these questions will apply to you as well. Question number 1, how do you plan your entries and exits? This is an extremely important question, and it really has a lot of depth to the answer here. So let me dive into some different topics as I'm answering this question through. The first thing I'll say here is that you should have entry and exit parameters or conditions before you start trading and looking into taking trades in the market. Without having these entries and exits planned ahead of time, you're likely going to fail as a day trader as you're going to let emotions control your decisions, which is the number one mistake that beginner day traders make. So here are the steps I'd recommend you take in order to actually have these plans ahead of time. Number 1, do some back testing. Choose a strategy that you've heard about on the market or a new strategy that you want to try out yourself, maybe by looking at the charts enough and seeing some patterns over and over, and then backtest this in history. You can easily do this on TradingView with the replay feature. Now, if you don't have a TradingView account, it's free to make an account and actually use TradingView. It will prompt you every once in a while to upgrade your account to a paid one, and personally, I do use a paid account as it allows me to add as many indicators as I want, as well as set alerts on the chart. But anyways, you can go ahead and just use a free account for this. All you'll do is click the replay feature at the top up here, and then you can click back in history and actually replay these candles in as fast or slow time as you want. So you can see I've jumped back a couple hours in time here. I can set the speed to 1 candle every half a second, 1 candle every 1/10 of a second, or even every 5 seconds, or just manually click through. So if I put that at the fastest speed, you can see how this plays out over time, and then you can backtest your strategy just like this. So stepping forward here, let's say you've backtested your strategy. It's actually working as you're backtesting in hindsight here. From here, you have 2 different options of where you want to go forward with it. You can either go into paper trading, which is basically just trading in real time, but with fake money. Now, I would definitely recommend this. However, I know that the results can still be varied from paper trading because once you're using real money, you're actually bringing in emotions, which can end up varying your trades. So if you want to skip paper trading, it's okay. I would still recommend paper trading, and you can do this on many different platforms. However, the other option is just to start with a small account. Use a very small amount of money that you're okay with losing and test out your strategy. Once your strategy is actually proven successful, and what I mean by this is about 100 or more trades taken. Don't take 4 trades where all of them are successful and then skip your small account and move into a large one, or skip the paper trading and move into a paid account. The sample size is just not large enough. So once it's proven successful for those 100 or more trades, then go into real money or increase your account size to something that's still comfortable for you. Keep in mind that there's still a chance you're going to lose, so if it's too much money to the point where you're not okay with losing it, then don't use this portfolio size. And lastly, use the weekends or off hours or whenever you can to actually review your trades that you made in the past week or day or whatever time frame it might be, and make sure you're following your planned strategy that you backtested and then tested on paper trading or a small account. And as you're doing this, you'll start to notice a pattern with those losers, and make sure you make small adjustments to your strategy over time to lessen these losers and increase the winners. Remember that this is more of a marathon and not a sprint. You don't need to change your entire strategy in one night, and you don't need to be making thousands of dollars the first day that you're trading. This is an education that you're learning that will be brought with you for the rest of your life, so take some time and let it sink in and build up. Question number 2 ties into question number 1 here. What are some basic strategies that we can apply? Now, there's so many different choices for this that I couldn't begin to give you an overview of how many different things you could choose between. However, I'll give you a couple different beginner strategies and some strategies that you can pick up very quickly. The first one is called the triple moving average strategy. Now, basically, there's an indicator called a moving average, which will take the average price over some certain number of candles on whichever time frame you're actually on. So if I just zoom into the chart here, I actually have 3 of these moving averages added, and one of them is green, one is yellow, and one is red. Now the time frame that I've chosen for these are 13, 21, and 34. between green, yellow, and red. You can use these moving averages in many different ways. However, one of the more common strategies is just to buy once the red moving average, the longer one, or the 34, ends up on the very bottom and the green ends up on the very top, where the green is the shortest moving average, or the 13. So you can see this is actually running in real time here, so I did not cherry pick this data at all, and let's just take a look at what that would actually look like. You can see that right in here where my mouse is hovering, the three moving averages are starting to cross. And then just a few candles later here, the red one is on the bottom, the yellow one is above that, and the green one is above that. So if you're just using this simple strategy, you could have bought at this point right in here, which is in these candles up here, and then you could have sold when the reverse happened, when the red ends up on the top and the green on the bottom, which you can see happens all the way over here. So if you sold inside of this candle, you see that if you would have bought here and sold here, you would have made some profit on this trade right there. You can do the same exact thing on the short side. So let's say you actually took a short position right after closing your long position. So you entered the long here, closed your long and opened a short position here, and then waited for that red to go below the green again. Now maybe down here you would have been taking profit anyways because it was pretty deep in profit on a nice move downwards. However, if you're just following this one simple strategy for your entries and exits and not considering anything else, that would have been like right around here where you would have been selling. So once again, another successful trade just from watching these moving averages. And looking at it in real time again, you can see that if we would have also entered a long position in here, we would still be holding that long through this entire move upwards, since the red is still on the bottom and the green is still on the top all the way through here. Another really common strategy for beginners to use and understand is just by using RSI. Now RSI is an indicator that gives you relative strength. If the RSI is below 30, an asset is what's called oversold, meaning it's been sold too much and it really shouldn't be that low in price. And if the RSI is over 70, it means it's overbought, meaning there's been too many buyers and the price should fall back soon. So let's just take a look at what that would look like in terms of buying and selling. You can see that right in here, we have these dotted lines on our RSI down here. And once we fall below it right in here, this would have been the buy signal. RSI is below 30 through all of this area right in here. So if we would have bought somewhere at the beginning of that, let's say, inside of this candle, and then our sell target is when the RSI goes above 70, or this dotted line. And that would have happened right around this candle in here, where we're above 70 here and all through this little area into here. So once again, this strategy would have bought here, sold here, and made you profit. And finally, a third beginner strategy is just to trade breakouts in the markets. So maybe you have trend lines drawn, for example, something like this, and once we break through those trend lines, you actually take a position, whichever direction it is. So you can see when the price started moving upwards here, we closed above this line, and then we continued to break out for quite a bit further on this very small time frame chart here. And typically when you're trading breakouts, you're just trading for these small moves. So maybe one or two candles later, after entering through the break of this blue line that I've drawn, you would have taken profits, hopefully somewhere up here before the huge pullback. Once again, there are so many different strategies that you could choose from, and you can watch some of my other videos for more inspiration on different strategies that you want to try out. Now, before I move on to question number 3, I just want to remind you that if you do like this video so far, I would really appreciate it if you click the like button on this video and hit subscribe below for future similar content. All of the content I post on this channel is very similar to this one and has a common goal of helping you become a successful day trader. So if that's of interest to you, just click subscribe, support me, and I'll help you out with more content. Question number 3. What do you recommend between trading and investing? Now, investing is actually one of the topics that I don't cover much on this channel, only because the internet and YouTube is already so flooded with investing knowledge. However, I'll give you my personal approach to this. Personally, I would highly recommend that you do both of these things. And if you're only going to choose one, investing should definitely be your choice. Personally, I only day trade about 10% of my total portfolio, and that's across all assets that I day trade. If you're extremely young, this number can be adjusted higher, and if you're older, you should probably adjust this number to be lower. You should consider this portion of your portfolio as your risky investments. Question number 4. What is the most basic knowledge a beginner can learn that will help them massively over the upcoming years of becoming a successful day trader? Now, I actually do have an entire series dedicated to this on my YouTube channel, and it's my Technical Analysis 101 playlist. I'll link it in the top right corner right now, and I would highly recommend you watch that, as that playlist is dedicated to exactly answering this question. And just to give you an overview, some of the more beginner topics that are in that playlist include how to read candlesticks, how to read common candlestick patterns, which time frames you should be using to trade on, how to draw and use trend lines, how to read and understand volume, and understanding risk management. And once you get through that playlist, I also have more videos on my channels with more advanced topics, targeting things such as Fibonacci retracements, Fibonacci extensions, pitchforks, and Elliott wave theory. Now, you don't need to know and understand all these different technical analysis tools to be a successful day trader. However, I do think the beginner ones are important to know and understand. But most importantly, if you want the number one thing that will help you become successful at day trading, it's that you need to control your emotions and use proper risk management on your trades. Without understanding that sentence that I just said, I guarantee you will not be a successful day trader. Question number 5. What position sizing should I use as a percentage of my overall portfolio, and how might it change from play to play? Now, this can highly depend on quite a few different factors, including your risk tolerance and your portfolio size. You should determine what percent of your portfolio you're okay with losing on each and every trade, combine with your stop loss on the trade, and move forward with that. For example, let's use some simple math here and say you're okay with losing up to 5% of your portfolio on every single trade you take. And let's say that each trade you take has a maximum loss of 25% on it before you would completely stop out of the trade. In this case, you can enter with about 20% of your entire portfolio. So let's run some numbers through that. If you have a $1,000 portfolio and you enter a trade with $200 and you stop out of the trade at minus 25%, you would lose $50 total on that trade, which equates to that 5% number that you're targeting. Make sure you play with the right numbers here that make sense for you and your risk tolerance. And most importantly here, make sure you know how much you're okay losing before you enter a trade. You should enter every single trade with the mindset that you're going to lose that trade and the money that you've set out to be lost. So if that number is too high, you're probably playing with too much money. Question number 6. What are some long and short-term strategies for different markets? Now, I'll start off this one by saying everyone has different strategies, and you can use long or short-term strategies in pretty much any market you'd like to. I'll tell you my personal approach. I like to trade the FX market, the Forex market, as much longer term trades. The market moves in less percentages and has a lot of intraday chop that kind of messes with short-term technical analysis that you'll draw onto your chart. So I take my Forex trades on a 2-hour, 4-hour, or even 1-day chart. Forex tends to have these long protracted moves in both directions, up and down. So longer term trades are easier to take and manage and will help you capture those long moves. Second, I use the crypto market as my intermediary time frame market, where I typically enter trades on the 15-minute to 1-hour time frame. I'm extremely bullish long-term on the crypto market, and so my strategy is almost entirely playing long positions here. I'm mostly looking for those breakout type moves on the 15-minute chart because I know that when crypto starts to run, it can run for an extremely long time. So being relatively zoomed in here without getting chopped up in the day trading 1-minute time frames is most beneficial for my crypto strategy. In terms of day trading, I use almost entirely options, as they're extremely volatile and you can see hundreds of % gains in just a matter of minutes, and this happens quite often in the options market. That also means that you can see 30 to 50% losses in a matter of minutes too, so make sure you're still using proper risk management. And lastly, my extremely long-term investing, which I consider to be a time frame of 10 or more years, consists of entirely stocks and ETFs, and I don't even use any strategies or watch charts for these trades. And furthermore, I never sell this. I'm only buying more and more, and if the price goes lower, I'm just going to buy even heavier into these. The stock market consistently increases over time, and it has since its inception, and there's no reason to believe that won't continue. So investing in the stock market for the future is extremely beneficial. And finally, question number 7. What are some ideas or recommendations with trading options with a very small account? Now for this, I actually have 4 different tips I'll give you. Number 1, avoid the big names that everyone seems to make a fortune off of, such as Amazon or Tesla. The premiums on these, or the cost to actually purchase those options, are going to be so high that you won't stand a chance at purchasing them without being way too far out of the money. Which moves me into tip number 2. Be extremely cautious with trading far out of the money contracts. The further out you go, the less % chance that your contract makes it in the money or even makes you money in general. So instead of buying these far out of the money contracts, I'd recommend you place spreads that are closer to the money or don't take the trade at all. There are always more opportunities in the market and other stocks you can be trading. But that also brings me into tip number 3. As a small account, I would highly recommend you switch your account over to a margin account and play spreads more than naked options. There are all sorts of different spreads that you can experiment with. However, I personally like simple vertical debit or credit, call or put spreads. And if you want to learn more about those, I have a video on all 4 of them individually. It's important to know that oftentimes spreads move as the same percentage win as the naked options do. So don't be afraid of these and think that your reward is so capped that they're not worth it. Spreads also have a huge benefit in that theta does not decay on them nearly as hard as it does on naked options. In other words, the value of your spread in a stock that's moving sideways will decrease way less than the naked option would. And finally, tip number 4 to finish off this video, focus on the percentage gains on your portfolio that you're making, not the dollar amount. If you're trading a $1,000 portfolio, it can be pretty discouraging when you have an amazing day that only makes you $50. However, you have to realize that that's a 5% gain on your entire portfolio, which is a huge percent and an amazing win for the day. If you were to compound 5% every single day, I guarantee you it would make you crazy rich. And if you don't trust me, go run the numbers on a compounding interest calculator to see where you would be. So there you go. Those are the answers to 7 questions asked in my Discord channel by some beginner, intermediate, or even advanced day traders. We have people of all sorts of levels trading in there with us, and if you want to come join, remember there's a link in the description below. Come check it out. Lastly, just one more quick reminder, if you did like this video, do me a favor, smash that like button below, hit the subscribe button. It really does help me out so much, and I really appreciate all of the support. And as always, good luck trading.